Now that we are practicing cash flow statement questions with adjustments, so in today's video also we will be discussing one full question with adjustments given it. We have in online class covered up all the adjustments related to cash flow statement, and I hope you all are practicing. So let's take an illustration from your textbook. This is illustration number 52, which is again a full-fledged question with adjustments. So it says prepare cash flow statement as per accounting standard 3 revised for the year ended 31st March 2020 from the following balance sheet as at 31st March 2020. So here is a balance sheet of Super India Limited. You all are aware of with the content of the balance sheet. So assets and liabilities, liabilities and assets. Now notes to accounts, and finally your additional information. So in this question, your adjustment number one says building was purchased for rupees 75,000. So surprisingly, we have been given the purchase of building in our adjustment, which generally is a balancing figure when we make an asset account. Then second adjustment is saying an old building, the book value of which was rupees 63,000, was sold at a loss of rupees 5,000. So a sale of building, the value of which was 63,000 was sold at a loss of 5,000, which means the sale price is 63,000 minus 5,000, that is 58,000. And finally, your third adjustment talks about tax provided during the year was rupees 80,000. So children, this word provided means provision for tax made during the year. When we discussed this adjustment for provision for taxation, we have seen the language can give you either tax paid or tax made. Provision made for the tax. But in this question, they have given you the word tax provided. So it means provision for tax was made during the year for rupees 80,000. So according to this adjustments, we will have one building account in our solution, and we will have provision for tax account in our solution, and you can see here in notes to account provision for tax account, previous year figure and current year figure has been given to us. So with the help of this previous year and current year figure, we will make provision for tax account ledger, and similarly we will make building account ledger. So shall we move to the question? One step by step we will discuss where the items will be going from the question. So let's start equity and liabilities, shareholders funds. Point number A, share capital. Equity share capital. Previous year 4 lakh, current year 6 lakh. An increase of rupees 2 lakh from previous year to current year. I repeat, an increase of rupees 2 lakh from previous year to current year. And I hope you have now understood that increase in share capital is always a part of financing activity. So let us see the solution where in financing activity this is an inflow of cash. So children, point number 3, cash flow from financing activity says proceeds from issue of shares 2 lakh. This is an inflow of cash, so it will be added. Hope this is clear. Now, the second part of shareholder fund, point number B, says reserves and surplus, statement of profit and loss. So the previous year profit is 1 lakh, current year it is 2 lakh. That means increase of profit by 1 lakh. So we all know increase of profit by rupees 1 lakh is a part of operating activity to start. So point number 1, cash flow from operating activities, net profit before tax and extraordinary items 2 lakh minus 1 lakh, that is 1 lakh. Instead of showing this 2 lakh minus 1 lakh, you can directly write 1 lakh as net profit. Hope this is understood. Now, shareholder fund part is over. Point number 2, non-current liability, long-term borrowings. So the previous year long-term borrowings is 2 lakh, current year it is 1 lakh. Decrease of long-term borrowings is because of repayment, and we know that long-term borrowings is a part of financing activity. So let us again go in the financing activity. Repayment of long-term borrowings 1 lakh. This is an outflow of cash. so it will be subtracted, hence it has been put in the bracket. 1 lakh in bracket, that means it is an item to be subtracted. Hope this is clear. Now let's go back in the question. Now we will have treatment for current liabilities according to this question. Point number 3, current liabilities, short-term borrowings, bank loan. Previous year 10,000, current year nil. That means this 10,000 has been repaid. That is why current year it is 0. Whether it is short-term borrowings or long-term borrowings, any bank loan is always a part of financing activity. So we'll go to financing activity. This will be shown as an outflow of cash, repayment of short-term borrowings, 10,000 in bracket because it is to be subtracted. It is an outflow of cash. I hope this is clear. The next current liability is trade payables. Trade payables, creditors, previous year 60,000, current year 45,000. Decrease of creditor as a current liability needs to be added to the operating activity, and it is done after operating profit before working capital changes. So you can see here less increase in current assets and decrease in current liabilities. So trade payables 15,000 is to be subtracted. This should be kept in bracket. The amount 15,000 should be put in bracket. All those items which are subtracted should come in bracket. So that is about trade payables. And the last of current liability, point number C, is short term provisions. It has a note number 1 with previous year 40,000 and 70,000. This will require ledger for provision for taxation from note number 1. Let us see first what is given in note number 1. Note number 1 says provision for taxation. So this will require a ledger for provision for tax, which I was discussing in the beginning. So let us see the provision for tax ledger which has been drawn here. So provision for tax being a liability, it will have previous year figure in the credit side by balance BD 40,000. This is previous year 2019 amount as an opening balance because it's a liability, and the current year to balance CD 70,000 is a closing balance which is for 2020. So we put these two amount as previous year and current year amount. Now let us see your adjustment language which I already discussed with you in the question. The adjustment says tax provided during the year was rupees 18,000, and I told you this is provision for tax made. So provision for tax made has a journal entry statement of profit and loss account debit to provision for tax account. So whenever the provision for tax is made, we have to put it on the credit side. So this is 80,000 and it says by statement of profit and loss. So after posting this, we will do the total of credit side, which is coming as 1,20,000. Same total will be written on the debit side, and we subtract this 50,000 amount to arrive at a balancing. Sorry, we subtract this 70,000 amount, 1,20,000 minus 70, to arrive at this balancing figure of 50,000. And as we have discussed in our online class, the difference goes to two bank account because this is the tax paid during the year out of the provision made. The journal entry goes provision for tax account debit to bank account 50,000. So this is how we complete our provision for tax ledger, and out of these two amount 80,000, this will be added to operating activity, and 50,000 this will be subtracted from the final amount of operating activity to arrive at cash flow from operating activity. So I repeat, 50,000 is to be subtracted from cash generated from operations and 80,000 is to be added to the net profit before tax and or extraordinary items. So let us see these two amount 80 and 50 in our solution. So children, you can see here add provision for tax 80,000. This is what I was talking about. Provision for tax made is always added to operating activity with the net profit, and tax paid is subtracted here 50,000. You can see here less tax paid, you should put this in bracket 50,000, and finally we arrive at the amount of cash flow from operating activity. So that's all about our liability portion of our question from this balance sheet. So liabilities is all over. Now we move with assets. Assets, number one, non-current assets, fixed assets, tangible, building. So building, previous year it is 6 lakh and current year also it is 6 lakh. So you can see that there is no change in the purchase of building. What it was standing as previous year at 6 lakh, current year also it is 6 lakh. But we have additional information for building as an adjustment. So we already discussed building was purchased for 75,000, and number two adjustment says an old building the book value of which was rupees 63,000 was sold at a loss of 5,000. So that requires a building account ledger to be prepared. So let us see in the solution the ledger for building account. So how do we start an asset account? From debit side. To balance BD, previous year 6 lakh is the opening balance of 2019, and the closing balance comes on the credit side. So you will leave four lines blank and write down by balance CD 6 lakh. So previous year and current year amount comes on the debit and credit side respectively. Now the first adjustment was saying the building was purchased for rupees 5,000. So the purchase of building has an entry building account debit to bank account. So that is why it will come on the debit side, because the entry is building account debit to bank account. So purchase is coming here 75,000. Second adjustment in the question was telling the building costing rupees 63,000 was sold at a loss of 5,000. So sale of building has an entry bank account debit to building account. So you write it on the credit side by bank 58,000. Why? Because out of 63,000, 5,000 was loss, and that loss goes to by loss on sale of building. You can write by statement of profit and loss 5,000. So the second adjustment is also posted in the building account. Now we need to do the total. The debit side total is 6,75,000. Write the same total on the credit side, and we need to subtract this 58,000, 5,000, and 6 lakh. The balancing figure is 12,000. This is 12,000, the balancing figure. And what should you write this? By depreciation account. And why we are writing in depreciation account? First of all, the purchase has been given to us in the question. The sale is already given to us in the question. And this is an asset account which is a fixed asset. So the balancing figure will naturally will be depreciation on the entire asset building, which is coming as 12,000. Hope this is clear to you all. We have already discussed in online class about this. Now out of this ledger, things which will go in cash flow statement is sale of buildings 58,000. This will be inflow of cash in investing activity. Loss on sale, this will be non-operating expense under operating activity, we will add it. Depreciation on building, this will be added in non-operating non-cash expense in operating activity. And the purchase of building 75,000, this will be subtracted under investing activity. So let us go into the solution and see these amount one by one. So children, you can see here depreciation on building, loss on sale of building 5,000. Both these amount 12,000 and 5,000 are added under non-cash and non-operating expenses. Hope this is clear. Now let us see the investing activity where the purchase and sale has been treated. Proceeds from sale of building 58,000. This is added, and then payment for purchase of building 75,000 is subtracted and hence put in bracket. I hope this is understood to all of you. Now let us go back in the question and see what is our next non-current asset. It is given intangible patents, and it was having previous year amount 50,000, current year it is 45,000. Decrease in patent is just like decrease of goodwill, which is known as patents amortized, or you can say patents written off. With goodwill we write the word goodwill will written off, and this is decrease in patents, so this is patents amortized. This will be a part of your operating activity, and this will be added at the same place where we add non-operating non-cash expenses. Amortization of patents 5,000. This is added. I hope this is clear. Now let's go into the question and see what else is a part of our assets. Point number B under non-current assets is non-current investment. Previous year it was nil. Current year it is 75,000. That means an increase of non-current investment. Increase is due to the purchases, and this results into outflow of cash. So you can see here in investing activity, payment for purchase of non-current investments 75,000 is to be subtracted from investing activity. Now that we have all these three items in investing activity, 58,000 plus 75,000 minus 75,000 minus, when you sum these three, you arrive at minus 92,000. Negative 92,000 is known as cash used in investing activities. So we have arrived at the answer for investing activity, which is a negative figure of 92,000. Now let's go back to question and talk about current assets given in a question. So the first current asset is inventories. Inventories, previous year it was 10,000 and current year it is 15,000. An increase by 5,000 in inventory as current asset will be subtracted in operating activity. So you can see here decrease and increase of current assets and liabilities. Inventories was increasing, so it is to be subtracted. So less inventories 5,000, this should be put in bracket. Now let us see the next current asset given in the question, which is trade receivables, debtors. Previous year 1,20,000 and current year it is 1,95,000. This is again an increase of current asset, that is debtors, by 75,000. So just like we did the treatment for inventory, this will also be subtracted in operating activity. And the last adjustment, last part of the current assets shows cash and cash equivalents. Previous year is 30,000, current year is 85,000. So this we all know, cash and cash equivalent is not a part of any of the activity. 30,000, 35,000 will go in, sorry, 30,000 will go in your point number 5, cash and cash equivalents in the beginning of the year, and 85,000 will be point number 6 to match our answer. So let us see in the solution the amount written for trade receivables. Trade receivables is also subtracted 75,000. And as I was telling you, the cash and cash equivalent of previous year 30,000 will be point number 5. Add opening cash and cash equivalent, that is beginning of the year 30,000. So all postings done. Let us discuss the final answer of operating activity and financing, because we've already discussed investing. So to start with, we have 1 lakh net profit. We need to add provision for tax and dividend paid 60,000, which is 1,40,000. That adds up to 2,40,000. Finally, the non-operating and non-cash expenses are added together to make it 22,000, and when you add this to previous 2,40,000, the total is 2,62,000, which is known as operating profit before working capital changes. This is your first answer under operating activity. After doing the treatment of current assets and liabilities in the list, we are having a negative figure of 95,000. There should be a bracket here, children. So from operating profit before working capital changes, 2,62,000. When you subtract 95,000, you arrive at 1,67,000. This is known as cash generated from operations. Because we have to subtract tax paid, we will subtract tax paid 50,000. This will result into 1,70,000, 17,000 in positive, and this is cash flow from operating activities. Cash flow from operating activities. Hope this is clear. We already discussed this 92,000, which is cash used in investing activities, And finally, the financing activity has 2 lakh, minus 1 lakh, minus 10,000, minus 60,000, which is finally 30,000. So financing activity cash flow is 30,000. When you sum these three activities, 1 lakh 17,000 minus 92,000 plus 30,000, we arrive at 55,000, which is net increase in cash and cash equivalent. It is net increase in cash and cash equivalent from three activities, and you need to add the cash and cash equivalents in the beginning of the year, which is 30,000, and that results into 85,000, which is cash and cash equivalent at the end of the year. Close this 85,000 with double line, and now we need to cross check. To cross check this, we will go back to the question and we will tally the figure of cash and cash equivalent of current year. So current year is 85,000 in the question, and this matches with the final amount of cash flow statement, that is 85,000, and that is what about is this question all about, with two important adjustment discussed: fixed asset building and provision for taxation. So this is a good illustration to explain cash flow statement with two good adjustments. I hope you have understood. Please revise this thoroughly once again. Listen to what I have explained you step by step in the question. Keep your same approach while solving the question, and also practice this in your copy. Thank you. Hope this has helped you further with your online classes and your videos having complementary effect to each other with your understanding. Now it's time for you to practice, children, and that brings an end to our class today. Thank you. Take care. God bless you all.